local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
As you navigate life after divorce, planning for your family's future becomes even more important. Hi, this is Mike Armstrong from the Armstrong Advisory Group. From everyday expenses to thinking about how college will be funded, it's important to have a clear plan for how all of your upcoming costs will be handled over time. Divorce also means adjusting to a new financial reality, where one household becomes two and your budget, saving strategy, and long-term goals may need to be reevaluated. Our new guide is called Divorce and Your Financial Plan, and it discusses ways to build a financial strategy that supports your family's next chapter. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, you know, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child. Plus, you who sold the house might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
It is Chuck, Mike, and Tucker with you here on what promises to be a busy week as we look through what we've got in the calendar. Hang on, Mike. I'm about to have a coughing fit, so you take it for a second.
Okay, so in terms of what we do have on the calendar, the biggest one of the week being the Federal Reserve meeting coming out. Is that Wednesday is the good old press conference at 2 p.m.?
It is Wednesday, yes.
We've got some housing data coming out as well, building permits. Was there home sales data, pending home sales data coming out on Tuesday? All of this, of course, having faded to the background over the last two and a half
weeks now. We're day 17.
Day 17 of the war in Iran. So the Fed stuff is actually going to be relatively important and attention-grabbing because on Friday of last week, as we will cover later, the subpoenas against the Fed were thrown out by a federal judge. And so a lot more to come on this and some interesting stuff as Jay Powell leads the Fed for one of the last two meetings that he will lead.
We've also got updated producer price index data out on Wednesday as well. It is stale because it's from February, which normally you'd be like, Chuck, like February was the last month. How is that stale? And the answer is, well, on the last day of February, the situation for producer prices changed pretty dramatically.
What do you mean?
I don't know. Like I'm just reading what I was. Oh no. Things are a little bit different as far as initial and intermediate goods and their prices potentially. So a lot of changes there, and so I don't know how much stock you place in this PPI reading. Not because it's not right, but just because the world is different than it was in February when the data was collected. So we turn our eyes now, again, as we've been doing for the last couple of weeks, to kick things off, talking about the latest in terms of where we stand with the Iran situation, simply because that is going to dictate basically what happens with the world economy, at least until that situation is done. And most likely for a period of months, if not years, after the conclusion, depending on what exactly the outcome ends up being.
Sure.
We just don't know what things are going to look like when this is done and how long it's going to go. What we did say at the outset, when we came in on Monday the 2nd of March, we said, look, there are going to be three things that determine how big of an impact this conflict has on the global economy. The first is going to be the duration. The second is going to be the scope, really talking about the geographic region that it encompasses. And the third is going to be the magnitude. How much damage is there within that region? And so what we do know is from a duration standpoint, given that we're now in day 17, I think we can say, look, this was not, a 2 or 3 day thing because we're in day 17. So every day that you go at this point, and these are estimates that, again, I kind of did the back of the napkin math, and now I see, energy people popping up on Twitter and, social media and everything that are doing similar ones. The estimates that we have now are for each day that this is the status quo, meaning Hormuz basically closed to traffic except for 1 to 3 transits a day that are happening instead of the normal 50 to 60. You're looking at about a 10 million barrel a day gap in supply versus demand.
Yep.
The first 2 weeks, that gap was closer to 15 million barrels a day on average because of a variety of different factors. SPR releases were not happening yet. Saudi Arabia had not yet begun pumping oil across its east-west pipeline to its Red Sea ports to try to export through there. So basically where I land is, look, through last Friday, you probably ran up somewhere around a 200 to 230 million barrel deficit, and each day from there you're adding another 10 million barrels. So by the end of this month, if we're still in this situation, you're talking 370 to 400 million barrels that we have lost in terms of production, and that's pretty much what the SPR releases from the IEA have agreed to replace. But remember, they're also replacing from a pre-existing stock that's going to have to be replenished at some point. It's not from new production, but this is where we stand right now. And you're also at a point where today, this week, I think is a big one, because the last ships that were able to get through Hormuz before this happened, they are now starting to reach their transit destinations in Asia and Europe this week. As an example, transiting from Hormuz to Rotterdam, which is, I believe, the biggest port in Europe, if not like top 2 or 3, but I'm pretty sure it's the biggest one. It's a 19-day journey.
Got it.
Which means that we're in day 17 right now. The last of any ships that were heading that way are going to get there over the next couple days, and then you start seeing where you have to draw from in order to fill reserves and things, whether it's oil, LNG, aluminum, copper, anything else produced in the region, fertilizer, you go down the list. Likewise, when you're looking at transit to Southeast Asia, you're talking anywhere from 11 to 20 days, depending on where you're trying to go as well. So this is going to be the week where you start to see the impacts potentially showing up. What I can tell you is that when you look at not futures curves for oil, but the actual prices that are being demanded for spot delivery now. So not, hey, what are you going to pay for May delivery or June, but what does it cost right now? Oil in the basically in the Middle East for immediate delivery, you're up into that 150 a barrel range. If you're talking jet fuel and bunker fuel for immediate delivery in Southeast Asia, you're into that 180 to 250 a barrel range. And so the prices that are now being demanded in order to satisfy need today are much higher than what's being priced into futures curves. And to me, again, remember, a futures curve is not what the market is predicting the price of oil is going to be at a point in the future. And I want to make this clear because I think it's important. If you look at the December Brent crude contract and say, hey, it's at $79.85 a barrel right now, that is not predicting that the price of crude is going to be $79.85 a barrel in December. It's telling you that if you want to order a barrel of oil for delivery in December right now, that's what you need to pay on a per barrel basis. It does not suggest anything about where the price of crude will be in December. It's telling you, based on what suppliers are offering then and what is demanded by buyers right now, this is the happy equilibrium if you want to lock in delivery then. But it doesn't tell you where crude prices are going to be at that point in time. So I think that that's important.
I wonder what the risk of inability to deliver on a contract like that is in any given point in time and how elevated it is right now. Right? If I buy a futures contract for delivery of oil in December today, presumably at any given point in time, the counterparty that could go bankrupt and fail to deliver and I don't get my oil.
Yes.
Presumably that's elevated right now.
Possibly. And this will eventually impact futures prices if that gets priced in.
Yeah.
Things to remember, and I'm pretty sure I have this right. Again, I'm not an energy trader, but I've read enough over the last couple of weeks to at least know my way around a little bit. West Texas Intermediate is a contract that requires physical delivery at settlement. Brent is not. Brent can be a cash-settled contract, meaning delivery is not required. And so there are some differences there when you look at the contracts. For the average person, you're sitting there going, what does that mean? What it means is that if you're trading West Texas Intermediate and you are long the May futures at the date of the close, you are going to be obligated to buy however much you have. And likewise, if you are selling, you will be obligated to sell how much you have. With Brent crude, the futures contracts are cash settled, meaning you do not need to settle with physical delivery necessarily. There are different reasons for this, different, understandings of how they work. But let's just leave it there, and I think we're good without trying to get into too much complexity there. Quick break here. When we come back, we'll talk about what the Trump administration announced last night in terms of plans to try to deal with the higher prices, and we'll cover that right after this.
Stay connected between shows. Follow the Financial Exchange on Instagram for daily clips on business news from New England and around the country. This is the Financial Exchange. If you're ready for a getaway that feels easy, relaxed, and completely refreshing, it's time to discover the U.S. Virgin Islands. This is your invitation to fall naturally in rhythm with the heartbeat of the islands, where the water is warm, the breezes are gentle, and every day moves at just the right pace. Getting there is simple. There's no money to exchange and no passport required. Just pack your bags and go. Right now, experience St. Croix's special promotion, a vibe like no other. You may be eligible for a $250 per person airfare credit when you book through participating hotels using promo code VIBE2026. Imagine spending your days exploring historic towns, relaxing on beautiful beaches, and soaking in the unique culture that makes St. Croix truly one of a kind. Book between now and June 30th for travel through August 30th and start planning your escape to America's Caribbean today. Explore St. Croix's vibe like no other as part of America's Caribbean paradise. Learn more at visitusvi.com and plan your trip using code VIBE2026. That's visitusvi.com.
As you navigate life after divorce, planning for your family's future becomes even more important. Hi, this is Mike Armstrong from the Armstrong Advisory Group. From everyday expenses to thinking about how college will be funded, it's important to have a clear plan for how all of your upcoming costs will be handled over time. Divorce also means adjusting to a new financial reality, where one household becomes two and your budget, saving strategy, and long-term goals may need to be reevaluated. Our new guide is called Divorce and Your Financial Plan, and it discusses ways to build a financial strategy that supports your family's next chapter. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Many families consider using a life estate as part of their planning, but without a clear understanding, it can lead to unintended consequences. Cushing & Dolan have a new guide called Calculating the Consequences of Life Estates that explains what to watch for and how to think through your options before making any decisions. Key rules to be aware of include the 5-year Medicaid lookback, where the state reviews financial transactions over the prior 5 years, and certain transfers, like giving away property or assets, can create a period where benefits are delayed. Call Cushing & Dolan at 866-848-5699 to request your free guide today. That's 866-848-5699. Or request the guide online by visiting our website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Experience America's Caribbean and fall naturally in rhythm with the heartbeat of the islands while enjoying incredible beaches, world-class cuisine, and unforgettable sunsets. Act now and take advantage of a special promotion to St. Croix called a Vibe Like No Other. You may be eligible for a $250 per person airfare credit when you book through participating hotels using code VIBE2026. For more information and to book your trip, go to visit usvi.com and use code VIBE2026. That's visit usvi.com and code VIBE2026.
Yesterday afternoon, the Trump administration came out and indicated that basically what they were looking for was trying to build a coalition of partners to help escort ships through the Strait of Hormuz. Now, again, in terms of my read on what this means, I don't think you're asking countries to become partners on on an escort mission in the event that you think this is truly going to resolve itself in the next week or two.
Okay.
Yeah. I think that's fair. If you thought this would simply be over to the point where that was not required, you would just say, hey, we'll be able to handle this and we'll move on. That coupled with the fact that, again, you've got this Marine expeditionary unit that you are moving into the theater as well, and potentially a third carrier group. These are all things where again, I'm trying to figure out, what is actually happening as opposed to, what's being said by every party, because if I had a dime for every time that, the Iranians posted videos of them destroying a U.S. carrier when it didn't actually happen, I'd be a rich person. Likewise, if I had a dime for, every quote from the United States saying, oh, well, this is already done and, there's nothing going on, well, okay, that's clearly not the case either. So pay attention to what's being done, not what's being said. And so when I hear about, hey, we're looking for, coalition partners to help escort, to me, that indicates that this is not going to be something that is simply over, done and dusted in the next week or two.
Agreed. And nonetheless, I think maybe markets are getting better at sniffing that out, because what occurred last week, remember on Monday of last week, the president announced that we were going to escort ships through the strait. I believe that was Monday of last week. And immediately oil prices fell
No, it was Tuesday when the energy secretary said we already have.
Okay, in either case, it moved markets substantially.
Yes.
Oil prices swung big time. At this stage, you're not seeing that type of thing. Yes, markets are up again today, but they're basically back to where they were on Thursday of last week. Oil prices are relatively stable, and so I think investors are starting to read some of this and to better understand it. But yeah, I mean, look, there are massive questions still about when and if, whether it's the U.S. military or a combined NATO force, has any ability to escort ships, deal with all the mines that are presumably now in the strait, and successfully move tankers through that area. In the meantime, what was it? Japan and Australia rejected the request and indicated they would not be able to send assets. Were there other countries as well?
Yeah, they both did. A Greek government official said that Greece has no plan to engage in operations in the Hormuz Strait. The German defense minister said Germany will not participate with its military in securing the Strait of Hormuz. And the UK Prime Minister Starmer said we will not be drawn into the wider Iran war. So, again, not that the Greek Navy is going to be the savior here. If you're betting on the Greek Navy to save you, love those guys, but that's just not what's going to happen here. So I think that ultimately, where we stand right now is, again, it's unclear that there's anything that moves us off the status quo in the near future. It could, there's ways where this develops, either positively or negatively over the next, over the coming days. But as of right now, basically no transits through Hormuz, save for, again, Iran apparently has granted permission on, kind of a one-off basis for this ship and that ship. But what I can tell you is what the United States absolutely does not want is for Iran to become the de facto toll taker for the Strait of Hormuz.
Yeah.
That would be by all accounts, a worse outcome than where we were when this started. In that, hey, you've got to now pay us, otherwise we're going to shoot at your ships.
Right.
That's not really where you want this to end up. So it strikes me that where we are right now is kind of an equilibrium that I don't think anyone really wants for the long term. But how do you get that equilibrium to move is an open question here that has not yet been answered.
Yeah. For over a decade now, the United States, I feel as though the United States' main policy goal has been to de-emphasize our focus on the Middle East and focus instead on Asia, specifically China and Taiwan.
Probably the exact right thing to do.
I mean, Hillary Clinton talked about it in 2011. Like, it has been pretty consistent from both sides of the aisle that is the overall goal. And I think that that's likely the ultimate goal here, too. And I think the question running through the Trump administration's mind is, at what point can we successfully convince the public and convince ourselves that pivot will be possible? Because right now it seems the answer is you can't.
There are going to be other questions on that as well, then, in terms of one of the major themes last year from the Trump administration was a significant amount of outreach to the Middle East from an economic perspective. There was the whole tour that went through the Persian Gulf. I want to say it was in like May of last year, with significant business commitments and things along those lines that were made by Persian Gulf states. Yeah. And they were combined with defense commitments from the United States and so on and so forth. And one of the things that I think you have to look at in response to this is, hey, if you are Dubai or the UAE or Oman or whoever it might be that is down there with a whole bunch of oil money, you're sitting there and you're going, okay, how are we going to come out better than this on the other side? And what does it mean as far as our business commitments to the United States and how we may rethink them in the aftermath of this? They're open questions. I don't have the answers. Like, the answer might be there's no change at all. We're reaffirming them.
Sure.
The answer might be, hey, we'll reaffirm them if you provide X, Y, and Z in the form of, additional defense, allocations and contracts that we can sign and so forth. It might be, no, we're not sure that this is what we want anymore because we saw significant disruptions for, again, we don't know how long this is going to be the case, but we saw disruptions and we don't know that this is in our best interest anymore.
Right. Well, I mean, the very idea of those same countries being a stable, investable area for capital to flow has all been called into question this over the last 3 weeks, or 2.5 weeks, whatever the time frame is we want to talk about. And so, of course, the return of flows in the other direction would be called into question, too, if those same countries cannot continue to, all sorts of things, like, heck, live Gulf and like.
Well, look no further than what happened to Kuwait after the first Gulf War. Like, Kuwait pre-Gulf War I was a totally different country that was kind of trying to build itself up the same way that, Dubai and Oman, and it never got back to what it was.
Yeah.
It just never did. Let's take a quick break here. When we come back, we've got Wall Street Watch, and then let's talk about the Fed and their potential responses to this when we return.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Protecting your home at the Life Estate can be problematic if you don't understand the rules. Cushing & Dolan's new guide called Calculating the Consequences of Life Estates can help you learn about how this strategy works and what to consider. Call Cushing & Dolan at 866-848-5699 and get your guide today. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you're ready for a getaway that feels easy, relaxed, and completely refreshing, it's time to discover the U.S. Virgin Islands. This is your invitation to fall naturally in rhythm with the heartbeat of the islands, where the water is warm, the breezes are gentle, and every day moves at just the right pace. Getting there is simple. There's no money to exchange and no passport required. Just pack your bags and go. Right now, experience St. Croix's special promotion, a vibe like no other. You may be eligible for a $250 per person airfare credit when you book through participating hotels using promo code VIBE2026. Imagine spending your days exploring historic towns, relaxing on beautiful beaches, and soaking in the unique culture that makes St. Croix truly one of a kind. Book between now and June 30th for travel through August 30th and start planning your escape to America's Caribbean today. Explore St. Croix's vibe like no other as part of America's Caribbean paradise. Learn more at visitusvi.com and plan your trip using code VIBE2026. That's visitusvi.com.
This is Mike Armstrong and Paul Lane from the Armstrong Advisory Group out with our brand new guide for the month of March about divorce and your financial plan. And certainly while it's not the path that anybody hopes to go down with their marriage, many marriages do result in this, and it results in a full reformatting of their financial scenario. Now, Paul, understanding these different assets that ultimately need to get divided in the event of a divorce gets pretty complicated. So let's start with the basics when you're thinking about retirement assets versus the home versus, say, a checking account. How does one need to be thinking about these different buckets of money when they're talking about the equitable division of assets in a divorce?
Yeah, Mike, first you have to divide out those different assets into those buckets you were alluding to before: pre-tax retirement savings, real estate, as well as after-tax investment accounts. And what you have to understand is with the pre-tax retirement savings accounts, there are taxes and potentially penalties associated with those. So those assets are not equal to perhaps some money in a bank account, for example, that is much easier to access and withdraw. Same thing with real estate. Equity might be significant in a property, but there are a lot of carrying costs and expenses associated with that ownership.
Yeah, these things are complicated, and unfortunately, what it can lead to if you're not prepared for it is a division of assets that doesn't work out in your favor once you consider the after-tax implications of that division. If you have questions that you're facing as you head towards this life move, get your copy of our new guide, Divorce and Your Financial Plan. It's available by calling us at 800-393-4001. Again, it's the free guide, Divorce and Your Financial Plan, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
The markets are beginning the week with a strong rally as Wall Street keeps a close eye on the war in Iran, with oil prices pulling back today. Traders are also waiting for a Fed meeting that concludes on Wednesday afternoon. Right now, the Dow is up over 0.9% or 432 points higher. S&P 500 up over 1% or 69 points higher. NASDAQ up 1.2% or 270 points. Russell 2000 is up 1.7%. 10-year Treasury yield is down 5 basis points at 4.228%. And oil pulling back over 4.5% today, hovering right around $94 a barrel. Breaking news from Meta this morning after the social media and tech giant announced a new partnership with Dutch cloud provider Nebius to spend up to $27 billion on its AI infrastructure. Nebius shares are surging 14% on that news. Separately, Reuters reported that Meta is planning sweeping layoffs. Meta stock is up by 3%. Meanwhile, NVIDIA shares are climbing 2% ahead of the AI and chip giants AI Summit this afternoon at 2 o'clock, where investors will focus on a speech from CEO Jensen Huang. Sticking with tech, where Micron Technology said it plans to build a second manufacturing site in Taiwan, sending shares up nearly 5%, and Dollar Tree posted mixed fourth quarter results, beating on earnings, but its annual outlook disappointed. However, shares are up 5% after Truist reiterated a buy rating of the discount retailer. I'm Tucker Silva, and that is Wall Street Watch.
Piece in the Financial Times. How will the Fed respond to the Iran war's fallout? Here's my guess. I'm not going to go through what they say because, honestly, I don't care.
Who? You're not.
I don't care what the Financial Times says about what the Fed's going to do.
Okay.
Like the author of this is not a Fed whisperer. They're smart. I'm not saying they're not, but like, I don't know that their opinion
uniquely informative.
No, it's just not. Here's what I do know is that when we look at what the Fed funds futures market looks like right now, it's currently pricing in a 99.1% chance that there is no cut at the upcoming meeting.
Okay.
Which is almost a certainty, and I would tend to agree. What I think is interesting is the next meeting after this is on April 29th. Mm-hmm. And that is going to be the one that ultimately matters when it comes to, does the Fed start to consider a policy adjustment? I think that we do get with this week's Fed meeting the Summary of Economic Projections, the SEP, otherwise known as the dot plot, that shows you, where Fed members think inflation is going to be at the end of the year, unemployment, GDP growth, all these things. I anticipate that being all over the place right now. Because I don't. The only way that you can have consensus on what you are going to see on those numbers is if you have consensus on how long the war lasts and how widespread the damage from it is. And I don't think we have any sense of that. It's again, there are paths where, depending on like what you're willing to accept and not, it can be done in a week. I think those are unlikely at this point. There are paths where we can still be in this situation at the end of the year. And I think those are unlikely as well. But, that's a wide range when you're talking about it.
So what are the questions that Jay Powell is going to get asked other than his end of his term and sticking on? Like, actual questions about monetary policy during war in Iran. Like, what are the interesting ones to come about? Because
can we start even before that?
Okay.
The first questions that he's going to be asked are, hey, when you look at the most recent jobs report, unemployment went up and you had negative job growth and negative revisions. Mm-hmm. Do you have concerns about the labor market that have now been rekindled that would cause you to continue the cutting cycle that you were going through in the fall of last year? And my guess then is his answer will dovetail into, we're currently seeing, a potential supply shock in a number of different areas, and we need more data to be able to assess what the actual impacts are on the U.S. economy before reacting, which is why they're not going to do anything this month.
Sure.
He will then be asked, how much of...
The next question is going to be the hypothetical. How much higher does the unemployment rate need to go before you say, regardless of the situation in Iran, we need to cut interest rates?
It's going to be there. Or, hey, can you give us a comparison to 2022 with the disruptions that you saw in oil and other commodities at that point and how that influenced your thinking? Tell us how that meshes with what we're seeing today.
Right.
And so, ultimately, here's why Powell can do nothing right now. Here's why doing nothing is the best option in the March meeting. Unlike 2022, where inflation was already running at 7% en route to 9%, inflation's somewhere in the high 2s to low 3s right now. I don't know exactly where it is, but it's in there because all the metrics are a little bit different. But it's in the high 2s to low 3s. And you can have a perfectly cromulent economy with inflation in that range. So he doesn't need to be hiking right now. If in January they said, hey, we think we've done enough and we're pretty close to neutral, we don't need to be cutting right now, then he's like, not enough has changed. Like, one jobs report since then is not enough to change your mind. It's one jobs report. And the other thing Powell can point to, unemployment claims, both initial and continuing, have remained in really good shape, even despite that jobs report.
Agreed.
The job openings data that we got last week showed improvement from the prior month. And so the jobs picture at best right now can be described as, confusing and kind of pointing in different directions with the last month of data, not, hey, it's falling apart. I think that's the case that he'll make on that side. So ultimately, I think it's almost a certainty, the market's pricing it in too, that the Fed's going to punt and just say, we don't have enough data now. The world is different from what it was, prior to this conflict beginning, and we're going to sit and wait to see how things unfold and get another 6 weeks of data before we decide to make any moves. It does take us then to the April meeting, which is where I think things are going to be very interesting, because the impacts of this are going to start to be more broadly seen and felt, not as much domestically, but the international picture is going to be dramatically different in terms of, hey, even if countries like South Korea, and I'll give you an example. South Korea, one of the things that they are doing, because they do rely on LNG as a major fuel stock for electricity production there, they have now removed their caps on coal power production that were previously in place.
Yep.
They were only producing up to 80% of what their coal power plants could previously produce. And so they're saying, no, we're going to spool that up as much as possible to try to offset this. If there's one thing that I know about, that extra marginal 20% production, it's the most expensive production, because you have to go out and find new fuel to power those plants, new people to work in them and cover those hours and everything. So it's not just, oh, well, the cost of it was, and I'm spitballing here, I have no idea what the cost of electricity is in Korea, but that'd be a fun guessing game. Let's say that it's normally 20 cents per kilowatt hour. That marginal 20% might be 30 to 40 cents per kilowatt hour. Like, it is something where it's like it might be 50 to 60, like 100% higher, because that's what happens when you're dealing with excess capacity that you're trying to get into the system usually.
Tie any of this back to the Fed, because ultimately...
I tie it back to the Fed in that the companies that then rely on that power to make things that they send to the U.S., computer chips, cars, all that other stuff, those prices have to go up in order to be able to pay for that power. If you are Samsung making memory chips, you've already jacked rates through the roof. You're going to have to go higher.
Right.
Okay? Other things. Samsung, at some point, the Korean government might say, guys, we need to start rationing power, because even with firing up all this excess coal capacity, we're still 3% short of where we need to get to.
Not that it wasn't already the case. I mean, so all of this points to the possibility of higher car prices, smartphone prices, all these things that we were already dealing with because of RAM costs and chip costs are exacerbated because of energy issues.
Sure.
The other thing that it really cements for me, U.S. and China were already the only two games in town when it came to AI development and production. Obviously, Taiwan has a pretty critical role in there too, but not in the development of the actual models and electricity to power them. This makes it so that nobody else can ever catch up. China has done a pretty incredible job over the last 2 decades of investing in non-oil energy sources. I think now 1/5 of their grid is powered by renewables like nukes. They kind of, they got to take credit for it being an environmental thing. It wasn't. It was an energy independence thing, because they realized they didn't have any oil and they couldn't rely on countries like Iran forever. So they are in a very solid position. We talked about their oil reserves at SPR of 1 billion barrels?
900 million, billion, somewhere in that range.
They are in excellent shape. And the U.S. is, again, comparatively in very good energy independence space. And so when we look past all of this, which you can't do in the moment, but when I look past all of this for a year out, 2 years out, the lead that the U.S. and China have in developing these things that have been the most important thing for the economies of each of them over the last 3 years, I don't see how anybody possibly catches up.
Here's the other thing that you got to watch out for starting in the next week or two. Like, these are the things that you're going to start seeing. And again, this is according to like people that actually like really know this stuff. You're already starting to see signs of, pending jet fuel and bunker fuel shortages in Asia and Europe.
Yeah.
Bunker fuel, if you're not familiar with the term, it's fuel used for, giant ships getting from point A to point B. Get ready for the return of supply chain issues. And it's like, get ready for the return of supply chain issues because getting stuff from point A to point B, yes, the best case is just that it gets more expensive. The worst case is that
it doesn't happen.
It just doesn't happen. Not all of it. Like, it's not that you're going to have, like, no fuel. But, if there were, previously X number of ships that were, traveling through, Singapore's port, now it's X minus 10% because that's all the fuel that they can produce. And so what does that do to shipping rates? It jacks them up because you will pay anything to get your stuff on a boat as opposed to just having it be stuck and left behind. So these are the things to watch in the coming weeks as well. And that stuff will start then to seep into the global economy as we get into April, May, June. But it takes time. Let's take a quick break. When we come back, we'll talk about private markets right after this.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show. Life estates are sometimes used to protect your home as part of your future, but it's important to understand how they really work before making any changes to your estate plan. Cushing & Dolan are experts in elder law and taxation. Their new guide, called Calculating the Consequences of Life Estates, explains the pros and cons and why careful planning is so critical. A life estate can allow you to remain in your home while transferring future ownership. But decisions like putting the property in your children's names versus using a trust can have very different consequences when it comes to taxes, control, and protection from creditors. Before you sign any deed or transfer property, be sure you understand your options. Call Cushing & Dolan at 866-848-5699 and ask for your free guide today. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're ready for a getaway that feels easy, relaxed, and completely refreshing, it's time to discover the U.S. Virgin Islands. This is your invitation to fall naturally in rhythm with the heartbeat of the islands, where the water is warm, the breezes are gentle, and every day moves at just the right pace. Getting there is simple. There's no money to exchange and no passport required. Just pack your bags and go. Right now, experience St. Croix's special promotion, a vibe like no other. You may be eligible for a $250 per person airfare credit when you book through participating hotels using promo code VIBE2026. Imagine spending your days exploring historic towns, relaxing on beautiful beaches, and soaking in the unique culture that makes St. Croix truly one of a kind. Book between now and June 30th for travel through August 30th and start planning your escape to America's Caribbean today. Explore St. Croix's vibe like no other as part of America's Caribbean paradise. Learn more at visitusvi.com and plan your trip using code VIBE2026. That's visitusvi.com.
As you navigate life after divorce, planning for your family's future becomes even more important. Hi, this is Mike Armstrong from the Armstrong Advisory Group. From everyday expenses to thinking about how college will be funded, it's important to have a clear plan for how all of your upcoming costs will be handled over time. Divorce also means adjusting to a new financial reality, where one household becomes two and your budget, saving strategy, and long-term goals may need to be reevaluated. Our new guide is called Divorce and Your Financial Plan, and it discusses ways to build a financial strategy that supports your family's next chapter. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Daily financial content in your feed when you want it. Follow the Financial Exchange on Instagram. This is the Financial Exchange.
Well, I got a new segment coming on the show this week. It's called the Money Matters Mailbag here on the Financial Exchange. It's your chance to ask the questions about business and the economy that you want answers to. So all you have to do for the Money Matters Mailbag is give us a call at 339-399-4333 and leave your message anytime, day or night. That's 339-399-4333, or email us at tfeshow@gmail.com. We may use your question right here on the show.
Wall Street Journal with an exclusive. Good for them for getting that. You know, you always like to see it. Top Apollo executive signs off on arrogance in private markets. So, Apollo, if you're not familiar with them, they don't run the space program. They are the guys who run a whole bunch of private market investments for either, institutions or very wealthy investors, or more recently, they've kind of gone downstream as they have tried to democratize private markets, which, again, anytime that I hear democratization being talked about in financial markets, I read that as, hey, we're trying to find a new generation of bag holders.
Let's pawn this off on somebody else.
When the music stops, make sure someone else is holding this. So, John Zodda is the co-president of the firm's asset management arm that has, that private market exposure under it. And he's just some quotes from him. Obviously, we're in the middle of a private credit party opportunity. If you do well, it's supposed to be pretty boring. If you do stupid things and you do concentrated things and you do things that you're not supposed to do in your vehicle, you will probably have a bad ending. Okay, that's fine. Like I get that. There's nothing, crazy going on there. You then had this one, and talking about, the sell-off that you're seeing in, large software companies, and that, small software companies might be held by private equity and private debt firms. I'm not as rosy and I'm not as confident in what will happen with the technology. Anyone who tells you that the earnings last quarter were really good and so all is all good, anyone who says that clearly doesn't understand. Most of the businesses that were bought from 2018 to 2022 are lower quality than those companies, smaller than those companies, and we're trading at a much higher valuation than those companies. And so I am concerned about many of those take privates. And again, we don't often get insight into what people at private credit firms are thinking because they don't want to tell us usually. But then you get to the real kicker here, which is asked what kind of recovery rates he anticipates on a private credit loan to a generic or mid-size Joe software company. Zodda said, Joe software company, if he's in the wrong place, I think it's going to recover somewhere between 20 and 40 cents. So, basically, here's the read, and this is what I've kind of put together even anecdotally on this stuff. Back in 2020 through 2022, when interest rates were really low,
there was money everywhere.
Everyone was just trying to throw money at the private credit and private equity space. And they made a lot of deals that were questionable based on what the economics looked like at that time. Now, a lot of those deals are looking much worse and are expected to worsen as the private credit that's needed to fund those deals is needing to be rolled up to higher interest rates and refinanced. And so the money is just saying, nope, we're not going to do it. And that is why you are going to end up with a whole bunch of problems in this space.
Here is my main problem/summary of this issue. Everyone who leads a private credit fund of some sort or another is right now trying to convince you that everyone else in the industry is bad at what they do and they themselves are good at what they do.
Yes.
This is how this reads to me. Is, hey, our fund is great, but look out for all the other problems that are in the space, but we're going to be okay. And we've heard the same thing echoed from the leaders of Blue Owl Capital, from KKR. Like
Blackstone,
every single one says, no, we're really good at this. We have our books in order, but watch out because other people in the industry don't, and there was some bad money loaned out. And it just puts you in the place as an investor or as somebody from the outside looking in, where you just have no idea, and you can't possibly know until the tide goes out.
You can't all be above average drivers.
It's this, yeah. It's the same situation with billions more at risk.
It's like so. I don't know like where the problems are because you don't with private credit. You're not going to know until it blows up.
Yep.
It's the very nature of it is that it's unfortunately not marked to market, and so you can't see where investors are concerned.
But it is getting to the point now where even leaders in the space are telling you that it looks like it might blow up.
And the other thing that I will say, again, one day doesn't mean anything. Stocks in general are up around 1% today. Blue Owl at one point today was down 2%. That doesn't feel great when you can't rally even on, kind of a risk-on day. So let's take a quick break. We got a whole lot more coming up in just a little bit.
If you're ready for a getaway that feels easy, relaxed, and completely refreshing, it's time to discover the U.S. Virgin Islands. This is your invitation to fall naturally in rhythm with the heartbeat of the islands, where the water is warm, the breezes are gentle, and every day moves at just the right pace. Getting there is simple. There's no money to exchange and no passport required. Just pack your bags and go. Right now, experience St. Croix's special promotion, a vibe like no other. You may be eligible for a $250 per person airfare credit when you book through participating hotels using promo code VIBE2026. Imagine spending your days exploring historic towns, relaxing on beautiful beaches, and soaking in the unique culture that makes St. Croix truly one of a kind. Book between now and June 30th for travel through August 30th and start planning your escape to America's Caribbean today. Explore St. Croix's vibe like no other as part of America's Caribbean paradise. Learn more at visitusvi.com and plan your trip using code VIBE2026. That's visitusvi.com. Life estates are sometimes used to protect your home as part of your future, but it's important to understand how they really work before making any changes to your estate plan. Cushing & Dolan are experts in elder law and taxation. Their new guide, called Calculating the Consequences of Life Estates, explains the pros and cons and why careful planning is so critical. A life estate can allow you to remain in your home while transferring future ownership. But decisions like putting the property in your children's names versus using a trust can have very different consequences when it comes to taxes, control, and protection from creditors. Before you sign any deed or transfer property, be sure you understand your options. Call Cushing & Dolan at 866-848-5699 and ask for your free guide today. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Divorce isn't just a legal process. It's a financial reset. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide, Divorce and Your Financial Plan, walks you through how to take inventory of your assets, avoid common mistakes when splitting accounts, update beneficiaries, and start building a plan that works for your next chapter. Divorce is complicated enough without all of its financial ramifications. The decisions you make now can have lasting consequences for your future, because after a divorce, it's not just about who gets what. It's about making sure your financial life is truly separated and set up to support your goals going forward. Call the Armstrong Advisory Group right now at 800-393-4001 and get your free guide, Divorce and Your Financial Plan. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today, we're talking about the use of life estates and your primary residence. Todd, does the 5-year waiting period for Medicaid eligibility apply to the creation of a life estate?
Well, the short answer is yes, it does. But let me explain why it does. So, first of all, when you create a life estate, again, the general way people do it is they tend to put the remainder interest of the property in the hands of children. I don't like it that way, but that's how they do it, when you could have the remainder interest with the trust. But the moment you put the child's name on the deed and you reserve the right to live there is a completed gift for gift tax purposes. No one thinks of that, but now you technically need to file a gift tax return. And it's that creation of the gift, it's that transfer of that remainder interest in the property to the child for less than fair market value that triggers the disqualification period for Medicaid. So that's why you have to wait 5 years after you create this life estate arrangement in order for the house to be protected from the nursing home. It's very hard to avoid the 5-year waiting period, folks. There's really not too many ways around it.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. You can get it by calling 866-848-5699. That's 866-848-5699, or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you as we kick off another week here. Again, it's going to be a busy one. We've got a Fed meeting on Wednesday, producer price index out then as well, jobless claims on Thursday, and this all happening with the backdrop of the continued conflict in the Middle East. Markets, a little bit of a reprieve from what's been weighing them down over the last week or two. S&P is up 64 points, up about 1% on the day. Dow Jones Industrial Average up 410 points, about 0.9%, and the NASDAQ Composite up 255 points, about 1.15% on the day as well. 10-year Treasury coming back in 4.9 basis points to 4.236%, so rates dropping just a touch, though they still are up about 0.25% over the last 2.5 weeks. And the dollar index down 0.46% as well to 99.65. Gold off $57.90 an ounce to $5,003.80. Can it continue to hold that 5 handle in the first digit? We'll see. I don't know that it really matters, but we'll see if it does. And we've got crude oil, West Texas Intermediate, down 3.5% today to 95.17. So again, a little bit of a reprieve there. Remember, though, last Tuesday, crude oil prices fell as well and then rallied about 20% for the rest of the week. So just because you're seeing a little bit of a one-day pause here doesn't, indicate that the trend has shifted. It might just be a little bit of a break here. AAA national average for gas prices continues to rise as well, up another 1.9 cents overnight to 371 8/10. Now up about 80 cents from where we were a month ago, and about 90 cents off of that 280 number that we had been touching near the beginning of the year. Diesel also closing in on a 5 handle, now at 4.98 8/10. That is up over $1.30 a gallon since a month ago, and so diesel prices continuing to outpace the gains that we're seeing in traditional gasoline, conventional gasoline. What?
Conventional. Normal consumer gasoline. I don't know. Diesel versus gas.
Yeah.
Done.
Then regular gas. That's regular. That feels right. So let's change gears here and talk a little bit about NVIDIA. There's a piece in the Wall Street Journal. It's titled, "Can NVIDIA's Dominance Survive the Sea Change Underway in AI Computing?" And basically what we have going on right now is there is a big technology conference in San Jose. It's called the GPU Technology Conference, or the GTC, as it's known in the business. And basically, GPUs, if you're not familiar with them, that stands for Graphics Processing Unit. And historically, this is where NVIDIA made its bread and butter. They made graphics cards for personal computers to make games look as good as possible.
I would love to see the pictures of this conference a decade ago compared to this year.
It's probably changed quite a bit. So the reason why NVIDIA has kind of developed into that prime, into that leader for what's known as AI training is graphics processing units needed to have tons of bandwidth to process a lot of information to get it on your screen as clearly, quickly, and crisply as they possibly could.
Sure.
And so it's a fundamentally different process than what is known as a CPU or central processing unit, which is more kind of the brain of the computer that simply directs all the pieces to work together and handles information flowing through it. So the GPU had to be this workhorse. Think of it as, the CPU is I'm trying to think of like the comparison for a car, but cars really only have one engine. I guess you could think of it in terms of, hey, the CPU is kind of the transmission. It's getting the power out to the wheels, and it still needs to do what it needs to do. The GPU is really the engine of the thing, and that's where you get your performance from when it's all said and done. So basically, NVIDIA, because of the need for a ton of power in order to generate the high performance gaming that was demanded over the last 20 years,
kind of just fell into the position.
They were in the right spot. Now,
yeah.
Fell into it, but if you look at some of what Jensen Huang had written 15, 20 years ago.
Yeah, not to say it was unintentional.
He saw where the puck was going, too. He's like, once we get to the point where, this kind of stuff is going to be required, we're going to be really well positioned for it. So I give him a lot of credit there. But when it comes to AI, there are two different pieces of the puzzle. There's the one that we've talked about for the last 3-4 years that NVIDIA's benefited from is training, which is, hey, I'm going to take 8 trillion different inputs, run it through all of these GPUs, and be able to basically teach the model, hey, if X, then here's like the probability of what you should say next for each word, and that's basically how the transformer works. It takes each question that's input and says, based on what this was, what's the most likely next word that I need to put out there? It's actually really similar to how children learn in that it's like a predictive model saying, okay, am I going to do this? There are some differences, but it's by and large set up that way. So that's training, and you need just a ton of computing power in order to do that. The question that people are trying to answer now, that people are using more AI than ever, is, okay, so you use these processors for training, which is all well and good because we've yet to figure out, necessarily a better way to do that. But what about inference, which inference is the process for actually determining the response. If X, then Y. What do I say then? And the question that is out there is, it's kind of a two-part one. Number one, is centralized inference actually the best way to go about it? And by that I mean, do you need to have all of that AI inference processed using a giant data center? Or can you do it using what's called edge computing in the AI business, which is basically on device, on the edge of, you touching like the AI processes and everything. And so that's one open question. But the other one is, even if it is still central processing that is going to be best for this, are NVIDIA chips the ones that are best based on the combination of upfront cost and ongoing cost, largely through being as efficient as possible in using electricity?
Let's answer the question using history as a guide.
Okay.
I mean, I know that these are different than, say, routers or, other types of systems, but I can think of very few hardware companies that have maintained their dominant position and profit margins for a decade or more.
Yes. Though, to be fair, one of the few exceptions in the hardware space was Intel. And I say was because the company is a shell of what it was.
Yep.
Intel's big problem in the tech bubble wasn't that they started losing money or that their profit margins evaporated. It was just, hey, the stock was dramatically overpriced and people were too optimistic about, how many computers would be sold on an annual basis. And so the company got caught up in that. But ultimately, Intel, for the better part of the 90s, 2000s, and 2010s, the only reason they kept AMD around in the business was so they couldn't be accused of antitrust. They basically kept AMD alive so that they wouldn't get sued by the federal government. Otherwise, they were a completely dominant player. Again, one of America's great companies that now is just a shell of itself and has been kind of run into the ground through horrible management for the last decade. NVIDIA, could you make a case that they're in a similar boat? Maybe. And to be fair, some of the stuff that they're doing now is starting to look a little bit anti-competitive with how they're doling out money to companies to try to, beef up their ecosystem at the expense of competition, and some of the ways that their contract language is done.
To be clear, they're not the only ones doing this, but the idea is, hey, we are going to invest this much money in your company so long as you buy this many of our semiconductors.
Yes.
And don't buy them from AMD.
And, by the way, if you're buying one part of our semiconductor ecosystem, you have to buy other parts, too, so that we can have, the whole boat is kind of how a lot of these contracts are looking. So the question is, look, is AMD going to be, like Intel, the exception that proves the rule? Or do they just become like every other computer hardware company where, once people figure out what you're doing, they eat into those margins, they come for you, and you have not as much of a moat as you thought you did because it becomes commoditized.
They have a big head start in a world where there are shortages of what they design and produce.
Yes.
So, it's tough to measure out how advantageous that head start really is in the space.
The other piece is going to be, hey, as models become more and more commoditized, which you better believe is exactly what's happening now, do companies say, hey, because this commoditization is eating into our potential revenue for these things, hey, we can't pay as much as you want us to, NVIDIA. That's a possibility, too. Let's take a quick break. When we return, we've got Wall Street Watch. Nope, I'm sorry, we've got trivia right after this.
Market insight, retirement strategies, real talk about Wall Street and economic trends. All live every day on our YouTube channel. Go to youtube.com/The Financial Exchange Show. This is The Financial Exchange.
When going through a divorce, understanding the rules around your finances can make a real difference. This is Chuck Zodda from the Armstrong Advisory Group. State law plays a major role in how assets are divided, whether that means a strict split or a distribution based on what the court considers fair. Health insurance and Social Security benefits are other considerations that you'll need to prepare for. You may have been covered under a spouse's plan and now need to find one of your own, and Social Security may offer benefits based on your former spouse's record. Our new guide, Divorce in Your Financial Plan, will walk you through these issues and more to help you make informed decisions that may affect your future. Call 800-393-4001 to request your free copy. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your home at the life estate can be problematic if you don't understand the rules. Cushing & Dolan's new guide called Calculating the Consequences of Life Estates can help you learn about how this strategy works and what to consider. Call Cushing & Dolan at 866-848-5699 and get your guide today. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you're ready for a getaway that feels easy, relaxed, and completely refreshing, it's time time to discover the U.S. Virgin Islands. This is your invitation to fall naturally in rhythm with the heartbeat of the islands, where the water is warm, the breezes are gentle, and every day moves at just the right pace. Getting there is simple. There's no money to exchange and no passport required. Just pack your bags and go. Right now, experience St. Croix's special promotion, a vibe like no other. You may be eligible for a $250 per person airfare credit when you book your participating hotels using promo code VIBE2026. Imagine spending your days exploring historic towns, relaxing on beautiful beaches, and soaking in the unique culture that makes St. Croix truly one of a kind. Book between now and June 30th for travel through August 30th and start planning your escape to America's Caribbean today. Explore St. Croix's vibe like no other as part of America's Caribbean paradise. Learn more at visitusvi.com and plan your trip using code VIBE2026. That's visitusvi.com.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. The DAV raised over $150,000 last year, but we still need your help. You can support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston. Time for trivia here on the Financial Exchange. And on this day back in 1968, General Motors produced its 100 millionth automobile, an Oldsmobile Toronado. Oldsmobile was the oldest American car brand until its closure in 2004. So our trivia question today, what is the oldest American car brand that is still active? Once again, what is the oldest American car brand that is still active? Be the seventh person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the seventh correct response to text us to the number 617-362-1385. With the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Piece from the Financial Times and a companion one from the New York Times. The Times are doing great work on this story. From the Financial Times, rising prices push U.S. car ownership costs to breaking point, and the New York Times, it's just crazy high car payments make ownership feel impossible. Here's the deal. It's just really sad to see the cases where people are just trying to buy cars that are too expensive for them with cheaper alternatives available. I very much feel for the people that are trying to buy the cheapest cars available and still can't make the numbers work.
Sure.
For which there are some. But, like you look at where we stand today, and no surprise, average sticker price for new vehicles sold in the United States is north of $50,000. Now, a lot of that is because the people that buy new cars are typically wealthier. And so it's not someone on $20,000 of income who's trying to buy that vehicle. It's, the people that are making $100,000, $150,000 a year. They're the ones who are often buying new cars. But what we continue to see is the only reason that price is that high is because people choose to buy those more expensive vehicles. We've gone through this, and regardless of the vehicle that you look at, you can generally find, unless you're buying true luxury vehicles, you can generally find versions that are far cheaper than that. If you're a big pickup guy, if you're an F-150 guy, and you say, hey, I'm looking for, an F-150. And again, I know that in some cases, there are reasons why you need X, Y, or Z for work. And look, if your truck is your office, totally get it, because it's a very different world than I live in. And I understand if, you need some comfort in this and that. But if you're buying an F-150, you can get in and out for $40,000. It's not going to have all the bells and whistles. But a lot of the people buying the F-150 are not buying it just for work. If you are, again, I understand why you need, engine X and, this.
If you're plowing,
I get it.
You can't even plow with the thing. Yeah.
I get it if you're hauling stuff all the time and you're no, this comes to $80,000. Totally get it. But Ford sells a lot of F-150s to guys that are just, carrying their kids around from, to and from sports practices and, might haul one boat a summer or something like that. And you don't need the Raptor to do that.
I'm going to focus for a moment on the interest rates part of the equation because that is a big piece of the affordability question too. I'm going to ignore the super prime and the deep subprime and just assume that most people are falling somewhere between prime credit, which would be between 661 and 780, or subprime, which would be between 500 and 600. The average APR for a new car on that prime level is 6.25%. If you're subprime, you're looking at over 13% as of March.
Yep.
For a used car, you're looking at close to 10% even in that prime credit score area, and closer to 20% when you're talking about the subprime area.
Really high.
Really high interest rates. And again, the point that you make, though, Chuck, is an important one. The reason that we have incredibly expensive cars in this country is because there are a lot of wealthy people that decide that that's where they put their money.
Yeah.
And that's why the car makers pretty much exclusively make those types of cars. But yeah, I still get confounded by the idea of people spending 50, 60, 70% of their annual income not on the car payments. I don't ever see that. But, the justifications that I see of half of my salary is the ticket price, the MSRP for the car that I'm buying, is very difficult to justify in my mind.
The best framework that I've seen online that references that very idea is the price that you pay for your car shouldn't be more than 10% of your salary. Not monthly payment-wise.
Yep.
But, hey, if you make $50,000 a year, the most you should spend on a car is $5,000. And that means that you're not going
to 20-year-old Civic.
Right. It's not going to be a very nice car.
Yeah.
But it's what you can afford. If you make $100,000.
Yeah.
You don't go out and get the BMW 3 Series. You spend $10,000 on a car, which could probably get you a 20-year-old 3 Series. But the maintenance on that's probably going to be awfully expensive given, what happens to German cars when you go over 100,000 miles. So again, no one wants to hear this or talk about it very much, but again, the reason why auto prices are so high is because this is what we choose to buy. You can absolutely find vehicles out there in the 20s, 30s, and 40s. New car buyers are not choosing them.
The other wild stuff that bears mentioning is the insurance and repair costs now on vehicles of any sort. Because of what we demand go into these cars, all the sensors, the backup sensors, the bumper sensors. I mean, even a ripped-off rear bumper can cost you thousands of dollars
to replace. It could be a couple grand easily. Yeah. It's nuts.
Hence why insurance premium is through the roof. But it sure is nice that it beeps at me when I get too close to the next car in the parking garage.
I do like that. Yeah, I do like that. Let's take a quick break here. When we come back, we've got Wall Street Watch and the trivia answer, and then we'll talk a little bit about 401k plans and taxes as well.
bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you're ready for a getaway that feels easy, relaxed, and completely refreshing, it's time to discover the U.S. Virgin Islands. This is your invitation to fall naturally in rhythm with the heartbeat of the islands, where the water is warm, the breezes are gentle, and every day moves at just the right pace. Getting there is simple. There's no money to exchange and no passport required. Just pack your bags and go. Right now, experience St. Croix's special promotion, a vibe like no other. You may be eligible for a $250 per person airfare credit when you book through participating hotels using promo code VIBE2026. Imagine spending your days exploring historic towns, relaxing on beautiful beaches, and soaking in the unique culture that makes St. Croix truly one of a kind. Book between now and June 30th for travel through August 30th and start planning your escape to America's Caribbean today. Explore St. Croix's vibe like no other as part of America's Caribbean paradise. Learn more at visitusvi.com and plan your trip using code VIBE2026. That's visitusvi.com. Life estates are sometimes used to protect your home as part of your future, but it's important to understand how they really work before making any changes to your estate plan. Cushing & Dolan are experts in elder law and taxation. Their new guide, called Calculating the Consequences of Life Estates, explains the pros and cons and why careful planning is so critical. A life estate can allow you to remain in your home while transferring future ownership. But decisions like putting the property in your children's names versus using a trust can have very different consequences when it comes to taxes, control, and protection from creditors. Before you sign any deed or transfer property, be sure you understand your options. Call Cushing & Dolan at 866-848-5699 and ask for your free guide today. That's 866-848-5699. Or you can request the guide online by visiting legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, this is Mike Armstrong and Paul Lane from the Armstrong Advisory Group, and we're here to talk to you about our brand new guide, Divorce and Your Financial Plan. Paul, let's fast forward here a moment. You're through the divorce process, and now you are focused on this entirely new financial life. What do you view as the first step toward developing that new financial plan as you're thinking about a single individual versus a married couple?
What you really have to focus on, Mike, is the cash flows of your household. You've gone from presumably 2 incomes down to 1 income, or you're just living off of a lesser income. So understanding what your expenses are going to be going forward and matching that to the income that's coming in to your newly formed household is really important. That is something that is a area of significant focus, as well as health insurance coverage is another area that is of significant importance.
How are things like taxes and general expenses, how does that all change now if you're thinking about a single person versus a married couple?
Yeah, the tax brackets will change for a single filer versus a married couple, usually to the downside, really. You're going to pay more in the way of taxes. So that's something that's really important to focus on, as well as many other areas of your financial plan.
Folks, we've got a brand new guide, again, from the Armstrong Advisory Group. It's free, and it's available at armstrongadvisory.com. You can request it there. It's Divorce and Your Financial Plan. There is a lot that goes into rebuilding your financial life after a life event as consequential as a legal divorce. If you have questions about how to navigate that process, this new free guide from the Armstrong Advisory Group is a great starting point. You can get it by requesting it again at armstrongadvisory.com or calling us at 800 393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are beginning the week well into positive territories. We are 2.5 weeks into the conflict in Iran, where oil prices are pulling back today. Traders are also waiting for a Fed meeting that concludes on Wednesday afternoon. Right now, the Dow is up over 1% or 510 points higher. S&P 500 up 1.25% or 82 points higher. NASDAQ up about 1.5% or 328 points. Russell 2000 is up 1.33%. 10-year Treasury yield down 5 basis points at 4.228%. And oil pulling back about 3.5% now, trading right around $95 a barrel. Breaking news from Meta this morning after the social media and tech giant announced a new partnership with Dutch cloud provider Nebius to spend up to $27 billion on its AI infrastructure. Nebius shares are surging over 11%. Separately, Reuters reported that Meta is planning sweeping layoffs. Meta stock is up over 2%. Meanwhile, Nvidia shares are up about 2%. Ahead of the AI and chip giants summit this afternoon at 2, where investors will focus on a speech from CEO Jensen Huang. Sticking with tech, where Micron Technology said it plans to build a second manufacturing site in Taiwan, sending shares up by 5%. And Peloton today announced its commercial series, the company's first bike and tread products built for high-traffic gym floors. Peloton stock is up nearly 5% on that news. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: what is the oldest car brand that is still active? That would be Buick. Mike from Billerica, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Mike. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Can I ask a quick question?
Yeah. To whom?
Both of you.
Okay. Listeners?
What needs to be different about a stationary bike to allow it to operate on a high-traffic gym floor? It's a stationary bike. Like, are you just putting, like, new little, like, sticky things on the bottom so it... what are we talking about here? That doesn't really seem like a huge innovation, but maybe I'm...
The vibrations from the floor are causing the thing to crumble after 16 months? I don't know. Don't have an answer for you.
You know, like, what...
But you're also talking to somebody who hasn't been inside a gym for better part of quarter century.
This is from the article I'm reading. So they partnered with Precor back in 2021. And I guess the machines combine Peloton's digital workout platform and instructor-led classes with hardware engineered by Precor to withstand heavy daily use. So it's just a more built-up bike for heavy traffic? I don't know.
Okay.
I don't know, man.
I mean, look, I'm sure that there's something you need to do if you're putting your bike into a gym, but it doesn't seem like it should have taken you 6 years to get to that point.
Well, you just don't understand, Chuck.
I know, Michael. Other things I don't understand. What is the tax bill that's haunting my 401k plan?
This one you do know. The tax bill that's haunting your 401k plan is your required minimum distributions. If there is a tax bill that's haunting your 401k, which by the way, not everybody actually has a tax bill that's haunting their 401k, because in many cases, people are withdrawing from their 401k or IRA about the same amount that they will be required to withdraw from their 401k or IRA by the time they get to 75. And if you're in that boat, there's probably not a whole lot that makes sense to change.
Either way, it is true, and again, a lot of you listening know this. The fact is, the money that is in your 401k as, pre-tax money, a portion of that is going to have to go to the federal government. How much is going to depend on how much you need to take each year, what tax bracket you fall into, like all of these different things. But if you're looking at your 401k being like, ooh, I've got, $1 million in it, well, a chunk of that when it comes out is going to not be yours.
It's funny because I feel as though we went from 5 years ago, nobody having any idea what a Roth was or how a conversion worked, to now pretty much everyone believing that they must get a Roth conversion done soon before the tax bomb explodes and they get hauled off to IRS jail, which doesn't exist.
IRS jail.
Jail exists for not paying your taxes, but there's no special IRS jail.
No.
Go ask Wesley Snipes. The reality is that these things get really complicated. So here's an example that I was faced with recently. Was a couple living in California who is intending to retire in a couple years to Arizona. And they definitely, I think you could argue they have a pretty significant tax bill haunting their future. But we had to really walk through the trickiness of navigating two different tax codes state by state that are vastly different if you're not familiar.
Yes.
And determining, okay, when does it actually make sense to do these conversions? Because there could be, the federal taxes are going to be about the same, but there could be a 7 percentage point swing depending on one state versus the other. And people around here, on the East Coast experience the same thing. I live in Massachusetts, but I might be retiring to Florida or to New Hampshire. These are really tricky pieces of the pie to navigate. And there's even more complexities in Massachusetts when it comes to how withdrawals from IRAs versus 401ks are taxed. So we don't even need to get into that part of it. But the point that I would make here is that everyone and their mother is now talking about how beneficial Roth IRAs are. And don't get me wrong, there are a ton of key advantages, especially if you're using them as an inheritance tool. There's some key advantages there compared to your traditional 401k. But it is not for everybody. And when I've seen people screw this up, it's usually not been these days about not doing enough Roth conversions. It's been about doing too much and surprising themselves in terms of the tax bill that they face now instead of in the future. And then we line it up and say, no, guys, you're going to be in a lower tax rate than you are now. Why are you doing this? And so my point here would be, everyone has now heard of Roth IRAs, Roth 401ks, and Roth conversions. Nobody seemingly that I meet with has a coherent plan as to why they're going to do one or not do one or contribute to one versus the other. And it's pretty important because nobody likes paying more taxes than they otherwise would owe.
It's true.
If you have questions like that and you want a coherent plan around how to deal with your benefit from work that the IRS is providing to you for saving money on taxes, you got to have a strategy that actually takes advantage of the rules. The number to call to book some time to talk about your personal strategy is 800-393-4001. That's for the Armstrong Advisory Group. We'll sit down with you and talk through your overall planning strategy. The number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Piece of the New York Times, what to do if you're a data breach victim, and you probably are. I'll change the probably to definitely, because if you are over the age of 20...
If you can read this article.
If you can read, there is someone somewhere in the world who has your identifying information.
Yeah, heck, probably even my 9-year-old kids.
They can read.
At some point, yes.
Right, if you can read,
yeah,
there's someone in the world that has your information.
Probably.
So... this New York Times piece does go through, a bunch of different things. I'll make it really simple at this point. Every single American, by default, should have their credit file frozen. What I mean by this, the three major credit bureaus that are out there, Experian, Equifax, and TransUnion, since who is it that had the breach? Was it Equifax? It was one of the E's.
Yeah.
One of the E's had a breach 10 years ago, and a bunch of reform came out of it, one of which was you used to have to pay for a credit freeze and unfreeze. Now you don't.
Yeah.
So if your credit is frozen, all that it means is that no one can go and take out new lines of credit without that freeze being lifted.
So practically speaking, I'm in the car dealership, and I'm trying to take out a loan. What do I actually need to do if my credit is frozen at that point in time?
And I've done this. So what you need to do is you need to ask the person at the dealer, which one of the agencies do you pull, which one of the bureaus do you pull my credit from? And they will tell you, we pull from X, we pull from Y, we pull from Z. You then need to go to the website of that agency or that bureau, and you can do a temporary lifting of the freeze. You specify how long you want it, so like for 1 or 2 days, so it's a minimal amount of time, and you lift the freeze in order to have that loan authorized and processed. And then after that, it goes back to being frozen so that no one can go and take out new credit in your name. The other thing that you can do if you've been a victim of, more identity theft activity, actually, where like you've like gotten notifications that someone has been trying to open stuff in your name, you can also put what's known as a fraud alert on any of the bureaus as well. If there's an alert on one bureau, they will pass it on to the other two. If it's different from a freeze, where a freeze you have to actually put on each one.
Sure.
But a fraud alert, basically what you put on that bureau is it says, hey, in the event someone tries to, take out new credit, if somehow they get past the freeze, call this number before issuing any new credit. And it's your phone number. Like, that's what you will put in there. And so it's another line of defense that you can put in as well.
Does this prevent everything? No. Obviously, if the worker at the grocery store rips off your credit card number and you get those fake transactions on your credit card, this doesn't prevent that because your existing line of credit is already open. It doesn't prevent somebody from intercepting a check that you mail and doing something there. It doesn't prevent somebody from attempting to convince you that they're a legitimate authority and voluntarily send payments their way. But I'm with you that this single type of fraud is now so much easier due to the pervasiveness of all of the breaches that have occurred. It's just very easy. If I want to go get Tucker's Social Security number,
just ask me.
It wouldn't be that expensive. Yeah, he announces it on the radio twice a week.
Yeah,
is it still 8?
But it wouldn't be that expensive for somebody that knows what they're doing to go and find it in all likelihood. And so this is at least one step that can be easily taken that I'm with you. Most people, it wouldn't change their daily lives.
Other things just to have in consideration, the 3 major credit bureaus deal with taking out new credit. There's a separate one that banks use for setting up new bank accounts called CHEX systems, CHEX, like the cereal. That is another one that you can place a freeze on to make sure no one's opening bank accounts in your name. If you are a victim of identity theft, the FTC has a website where you can report that, and then that FTC report you can then take to your local police station. They most likely won't be able to do anything about it, but just in terms of being able to file an appropriate police report and have documentation on file, those are things that you should be doing in the event that you actually have any identity theft that is going on. But this stuff is really common. It's really painful. It sucks. Trust me, I know. But ultimately, these types of things can help you to protect yourself so that you're reducing the risk of any kind of major problems. You can never eliminate it completely, but you can start to, clean things up a little bit.
Oh, and by the way, with AI, you'd better believe that it just became a lot easier for the scam artists to perpetrate this sort of thing.
Well, that's good because no one's really using AI these days. Let's take a quick break. When we return, Stack Roulette.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network. Protecting your home at the life estate can be problematic if you don't understand the rules. Cushing & Dolan's new guide called Calculating the Consequences of Life Estates can help you learn about how this strategy works and what to consider. Call Cushing & Dolan at 866-848-5699 and get your guide today. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you're ready for a getaway that feels easy, relaxed, and completely refreshing, it's time to discover the U.S. Virgin Islands. This is your invitation to fall naturally in rhythm with the heartbeat of the islands, where the water is warm, the breezes are gentle, and every day moves at just the right pace. Getting there is simple. There's no money to exchange and no passport required. Just pack your bags and go. Right now, experience St. Croix's special promotion, a vibe like no other. You may be eligible for a $250 per person airfare credit when you book through participating hotels using promo code VIBE2026. Imagine spending your days exploring historic towns, relaxing on beautiful beaches, and soaking in the unique culture that makes St. Croix truly one of a kind. Book between now and June 30th for travel through August 30th and start planning your escape to America's Caribbean today. Explore St. Croix's vibe like no other as part of America's Caribbean paradise. Learn more at visitusvi.com and plan your trip using code VIBE2026. That's visitusvi.com.
When going through a divorce, understanding the rules around your finances can make a real difference. This is Chuck Zodda from the Armstrong Advisory Group. State law plays a major role in how assets are divided, whether that means a strict split or a distribution based on what the court considers fair. Health insurance and Social Security benefits are other considerations that you'll need to prepare for. You may have been covered under a spouse's plan and now need to find one of your own, and Social Security may offer benefits based on your former spouse's record. Our new guide, Divorce in Your Financial Plan, will walk you through these issues and more to help you make informed decisions that may affect your future. Call 800-393-4001 to request your free copy. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Follow the Financial Exchange on Instagram for market insight, clips, reels, and daily money talk. This is the Financial Exchange Radio Network.
Hey, we know you have questions, and we've got your answers. Join us for a new segment starting this Thursday called the Money Matters Mailbag. Shoot us or call us to leave a voicemail at 339-399-4333. That's 339-399-4333 to leave us a voicemail, or email your question to tfeshow@gmail.com, and we may use it on the show.
Mike, what do you got for Stack Roulette?
Well, it's tryout season for anyone that plays youth hockey around this area, believe it or not. They finished the season. Yeah, they finished the season and then immediately do tryouts, which is actually a smart idea because the kids are still in season mode, and they're actually like still skating and used to it. So it does happen in March, at least in our town. And the Wall Street Journal has a piece out today. The $40 billion game of youth sports has only one winner, Dick's Sporting Goods. I would debate that a little bit, but Dick's Sporting Goods, in terms of their presence nationally, they're right. There is no competitor left. What were some of the other big ones? Was Decathlon Sports was a big one that went away.
Sports Authority,
MVP Sports.
They're all gone. Dick's is the last remaining national one that I can really think of. Play It Again is a bit of one, but they're more of a franchise model. Dick's Sporting Goods is publicly traded and a huge beneficiary. And the level, for those listening that don't have kids in youth sports these days, the costs associated with it, and granted, I'm cherry-picking ice hockey, which happens to be the most expensive probably of all of them, unless you've got an equestrian in your family.
It's not as much as ice tennis.
Sure. The local town league that my kids play in for a travel team is about $2,000 each for the season.
Oh.
When you talk about club hockey, I've got the junior Philadelphia Little Flyers up here. The 2025 to 2026 program for kids starts at $11,500 before equipment.
Did you say $11,500 before equipment?
Before equipment, $11,500.
Does that come with a car?
Yeah. This is the level at which parents are spending on their kids' sports experience, which I am guilty. I don't obviously participate in club programs, which is why I didn't cite them. But, these are the types of things that people are investing their money in. And, I can see why Dick's Sporting Goods would be able to pick up some of the dough on this, because compared to the registration costs and the program costs of some of these things, an extra bat or uniform is just kind of a drop in the bucket.
I got to be honest. This piece leaves out the second winner of the youth sporting binge that we're on now, which is all of the administrative bloat in youth sports and all of the organizations that just capitalize on every parent thinking that their kid's going to be the next one in the Olympics, when in reality, if you're listening to this show, your kid's not going to be in the Olympics.
Oh, yeah.
Your kid's not going to play professional sports. Your kid's not going to play D1 sports.
You'll see.
I say this as someone who was very cuspy D1. I had no business actually playing Division I sports, but somehow weaseled my way into it.
Sounds like Chuck.
Oh, yes, exactly. I made a very convincing case. But once there, kind of realized, man, I'm in over my head. This is not where I parked my car. And so I think that sports are great for building resilience. I think they're great for building teamwork, for encouraging competition. I think they're great for all of this stuff. I think they're terrible for spending money.
By the way, indications that you're right about that are that private equity has been investing heavily in the space over the course of the last decade.
Anywhere that PE is, they're not doing it because they really believe in Jimmy.
For the love of the game.
Yeah.
They don't think that Diane's going to really make the leap this year. They just want your fees.
Diane.
I'm sorry. That's just what it is.
Oh, boy.
Let's take a quick break, and tomorrow you can all tell me why your kid's going to be the one who's going to make it, actually.